Good morning, ladies and gentlemen, and welcome to the Tortilla Mexican Grill investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll notify you by email when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you give that your kind attention, we would be most grateful. And I'd now like to hand over to Andy Naylor, CFO, and Richard Morris, CEO. Good morning to you both.
Good morning.
Good morning.
Morning.
Good morning to you all out there in the Zoom world or Teams world or whatever it is. Good morning. Thank you for your time. We'll go through the presentation, hopefully 45 minutes, and then, as Mark says, we'll take the questions and take it from there. So let me start by introducing myself. My name is Richard Morris. I am the CEO of Tortilla and have been with the business since February 2014. I've been involved in the hospitality sector all my career, really, starting out back in the day with TGI Fridays in the US and running a few of their central London locations, or one of their central London locations. Moved over and did Rainforest Cafe in London and in Disney World Paris before starting as one of the original management team of Lock Fine Restaurants, which began in '99 in Cambridge, actually our first site, and then we sold that business to Green King back end of 2007, timing being everything at that time. From there I did some consultancy work and joined Tortilla in 2014 as the MD and recently promoted to CEO in January of this year.
Good morning, everyone. I'm Andy. I'm the CFO of Tortilla. Started my career at Deloitte doing the classic ACA route. I've always been a numbers guy, did a physics degree, so you could say it was a natural path. I mostly worked with oil and gas companies at Deloitte, AIM and FTSE listed, so some good PLC experience. Before then taking a role at Gazprom, a big Russian gas giant. Spent 4 years there before deciding I fancy doing something a bit more tangible, and I've always been into food, and so it felt like a natural thing for me to join Gaucho Restaurants as head of finance. Sold the business whilst I was there to Equistone Partners, and then I joined Richard at Tortilla about 4 years ago. Recently, at the beginning of the year, I also started on some business development opportunities for the group, which we're going to cover off later, and they're super exciting.
Okay, so why are we here, and hopefully why are you here to really run through why we're so excited about this business going forward. The key investment highlights for us are that we are already the largest and most successful fast casual Mexican restaurant chain in the UK. It's a big statement, it's a long sentence, but it's actually correct. We have very flexible site locations and formats, which have actually become sort of even more flexible post-COVID. The trends we've always embraced, fast-growing sector trends, very strong vegan, vegetarian offer. Latin American food is becoming more and more popular as each month passes in the UK. And through COVID, it's highlighted our huge strengths with food to go and delivery. Fresh, customizable, and value for money products. I won't say any more than that now, but that theme runs through our entire presentation and frankly runs through our entire business and why we consider them to be the three pillars of success for us. We have a strong marketing and multi-channel strategy in the business. We have a very well invested and scalable central infrastructure, which I'll share later. COVID-19, whilst this isn't all about COVID, there's no doubt during and hopefully post, if I can say post, things have been very strong for us. So we'll highlight some of those areas as well. The business has always been successful and has always had a strong, profitable sales growth since its inception. And the future, whilst was always looking rosy for us pre-COVID, certainly some really strong enhanced opportunities now for the business. A little bit about us. I mean, the business was founded in 2007 by a true blue, authentic San Francisco burrito eating guy who was born and bred in the Mission District in San Francisco. So knew the Mexican food market exceptionally well. Moved to London to do a management degree at the London School of Business, and was somewhat shocked at the dreadful standard of Mexican food in the capital at the time, and ended up doing a business thesis on Mexican food and Mexican restaurants. And wonderfully, he lived out his dream, and he opened the first Tortilla in February 2007. Did really well, and basically since then, as we sit here now, we have 62 restaurants worldwide, and 4 what we call cloud kitchens. Cloud kitchens being the delivery-only kitchens that you will no doubt have read about. Again, the value for money proposition: freshly prepared, customizable food, which we'll dig into shortly. The track record of consistent performance for us, CAGR of 21.5% between full year 13 and full year 20. So again, highlighting the strength of the business pre-COVID. We have a strong central kitchen facility and a strong head office, which I'll highlight. And really why we're here is because the future opportunities do look so rosy for us, and we want to share the reason why we think that is the case. It's quite difficult really with COVID to try and do some comparative of numbers, but we are and have been sort of doing like-for-like numbers versus 2019, which is the most recent normalized period of trading for us. And we just wanted to highlight to potential investors that whilst we're 25% up on sales for the half year from 2019 versus this year, our profit performance has been extraordinary. Now, clearly there have been some helps from the government on this, but nevertheless, in a sector that's been completely decimated and on its knees through the pandemic, for us to be performing in such a way is exceptional. And frankly, as Andy will share later, the numbers have continued to be hugely successful even since the end of the half-year period. We consider ourselves to be what is termed as a fast casual restaurant brand, a fairly new title for restaurants. There was always fast food or casual dining. This sector has been around, I guess, 10 or 15 years. And the top left-hand side shows you in the UK who we would consider ourselves to be competition and who we consider to be the market leaders within our sector. And as I'll highlight now, there have been some winners and some very big losers in this over the last 12 to 18 months. We look at who we consider to be the legends of the sector. Clearly, Pret-a-Manger and Nando's in this fast casual sector have been the largest and the most successful, between them nearly 1,000 locations. Obviously, Pret has suffered through the pandemic. It's not a business that's well known for its delivery, doesn't particularly trade in the evening, and is very heavily office-based. So sadly, for what is a fantastic business, the model just doesn't work in its current format now. So they're obviously going to work away and find a way of dealing with it, and I'm sure they will be successful, but they have had to close a lot of sites. Nando's obviously was closed for a large chunk of COVID, but it's such a well-known brand and such a successful business that I know they've come out of the pandemic strongly. Five Guys, who play by slightly different rules to the rest of us, very, very, very well-financed business owned by multi-billionaires. They actually didn't close at all during COVID and have done exceptionally well. And we see them continuing to grow at a pace. Now, the rest of these, you'll all know some or all of them, have had a pretty shocking time. Itsu has been through a refinancing. Leon had to CVA. We've done very well. Wasabi have CVA'd. Barbarito, Chilango have CVA'd. And then at the bottom right-hand side, you'll certainly recognize the name Chipotle, which has been in the UK as pretty much as long as Tortilla has, but they just haven't got it right. They are at 12 locations at the moment, but they have closed a couple so far already. So the truth is, there isn't an awful lot of competition in our sector. Some of these businesses will continue to survive, but I have no experience of anyone who's ever CVA'd who's come out of it in a particularly good position. So that in itself for us opens up great opportunities. The question is always asked, well, what have you done differently to everybody else? And I think we have to, without blowing our own trumpet too much, we've been an incredibly well-run business for a long time. We've been careful at the right times. In 2017, 2018, when the market was overheated, we only opened a few sites. We didn't want to get into the world of paying ridiculous rents for marginal locations. And I'd have to say some of our competitors here did get involved in that. Very highly leveraged businesses, which we've never been. And I'm afraid COVID came and really that was the reason why they've struggled so much. So for us now, in a strong position with a strong balance sheet, having recently IPO'd, we're in a really good position now to take advantage of this and grow our business perhaps quickly than we have in the past, more quickly than we have in the past. Bottom left shows you really our competitors in Europe, and there really isn't anybody else other than Fresh Burrito, which is a French Mexican burrito business. And the reason I highlight that, and the reason I mention Chipotle, is with 62 sites, we're the second largest Mexican fast casual business in the world, second only to Chipotle, who have over 2,500. So clearly there's a hell of a prize out there somewhere for somebody to go out, not just in the UK, but in Europe as well, and really grow this brand. So whilst the IPO is totally based around UK growth, because we see an awful lot of opportunity here, there's no doubt Europe offers up something for us to look at further down the road.
Okay, so just to follow on from what Richard was talking about around the sort of property side of things, we've got a really experienced in-house property team. We've got the proud claim of having never closed a site. We use a very data-driven sort of rigorous process, which is anchored around a 35% return on capital. That's the key metric we assess our ability to achieve. And we're typically spending between 350 and about 425,000 on the capital expenditure of the site, so relatively modest compared to the bigger restaurant groups. We operate in a range of locations, as you can see from this slide. So you've got sort of high streets, what we call baby sites, which are just smaller tortilla units, which are often in residential areas. We've got cloud kitchens, which are delivery only. We've got shopping centres. We've got a theme park site, transport hubs. So wherever there's customer demand, we've got a very flexible kitchen setup, which means it's we've got an ability to take on sites that other businesses wouldn't, whether that's in terms of size, because the kitchen setup is relatively small. We've not got lots of expensive kitchen gear. We can operate in quite small locations, and we don't need large front of house because a lot of our customers either grab and go or take delivery. On top of that, one really important thing is we don't need extraction because of our central production kitchen, which Richard's going to talk about a bit later on. Most of the preparation on site is the preparation of salsas and guacamole. So actually, as a result of that, we should benefit substantially from the change in the use classes on the high street. So there's a new class that's been created, E, which has been introduced to try and free up the high street to mean we can take retail sites without applying for change of use. And I think that's going to really open up the UK white space for us more than other restaurant groups that need to kind of put extraction and lots of kind of kitchen machinery in. We've also not got too many sites in London City. Got a lot of sites in residential areas, etc. So they've really benefited during the pandemic, and I think it's pretty clear from coming into London every day. There's definitely an increased work from home trend that we're seeing, and that'll really benefit us in the long term as well. So yeah, super flexible, and that underpins a lot of the other commercial opportunities as well that we've been looking at in terms of slotting our operation into other things like campuses or motorway services, etc. So we'll talk about those a bit later on.
This slide is a little bit dated now because this is sort of as we came out of COVID, but I think it's important just to highlight the strength of the sector really in terms of people wanting to continue to go out and eat. We all remember those what seems like a long time ago now. People, when the pubs opened, sat out in the beer gardens in the pouring rain because we were just desperate to get back out again. And I think in the top left-hand side of this, you can absolutely see there was a huge pent-up demand for people to want to get out. We are a nation of socializers. We like to be in pubs and restaurants and clubs and bars, and being out, I think, was a huge excitement for everybody, having been locked down for so long. But encouraging, nevertheless, that people were very comfortable getting straight back out there again. There didn't seem to be any hangover or fear of mixing again. So really encouraging. Bottom left-hand side, this is also quite exciting, and I'm sure you've probably seen the same as I have in the last 18 months. As there does seem to be quite a large growth within our Latin American cuisine. We don't benefit from sort of lots of Asian and Indian people coming over and living in the UK with Mexicans. We don't have a load of Mexicans living in the UK, so it might be why it's been a slightly slower burn in terms of growing the product. But certainly I've noticed in the last 18 months, the shelf space in supermarkets has almost doubled, tripled even, with hot sauces, salsas, Mexican food, Mexican offerings. So this says that basically the growth of Latin American food at the end of 2023 will have doubled in 10 years. I feel like it's going to be more than that. Certainly from our numbers, it's been extraordinary, the growth in popularity of our food over the last 12, 18 months. And also, not just the food itself, but the way that we prepare and the way that we get our food to our customers has been fantastic. And we benefit from being part of the 8 menu food mega trends. Every single one of these areas, Tortilla ticks, and I can't think of too many other hospitality businesses where all of these areas would be part of their brand and their product. We are very convenient. You can have a very healthy meal with us. We do naked burritos where you can have some canalettes, some freshly grilled chicken, some sweet corn, salsa, pico de gallo, extremely healthy, low calorie, all made fresh on site. Or if you want the indulgent burrito, the large burrito with guacamole and sour cream and all the trimmings and barbacoa beef, absolutely fantastic. But you can't eat that every day. So the great thing about our business is, although we only have 5 or 6 core menu items, there's millions of different ways to enjoy our food for the healthy or for the indulgent. Customization has been very popular over the years and become more so in the UK when people go out to eat. We absolutely embrace that. We encourage people to try different things. Big tick. Value. On the next slide, I'll highlight value for us. We see ourselves as the most competitive business, and we know we are in terms of our price point. Some good sustainability stories, things that we will obviously continue to work on as that world becomes ever more important. And it's still an experiential meal. Mexican food and burritos and tacos is still slightly differentiated, which is great. We're not as popular as burgers and pizzas and may well never be, but we are definitely climbing the ladder of popularity. So it's still quite a fun, different product. So as I just mentioned about value for money, if you look at our competitors, we are noticeably less expensive than they are, and we've always tried to remain that way. Certainly in no way in reference to the quality of our food, which we think is the best of all of them. It's just that we are very sensitive around prices. We know our consumers are, and we've managed to keep our prices lower. And I think that's an accumulation of many things. I think it's a very strong management team. We manage our suppliers incredibly tightly. We have very few suppliers. We have an incredibly tight relationship with the people that we do use. We're very competitive on pricing when we're buying products. And I think that's really helped us. We have a central production kitchen, which again, I'll mention. That helps us. 75% of our menu comes from that kitchen. So consequently, the quality of the food is incredibly consistent. We don't have 52 chefs in 52 restaurants having 52 different ways of producing something. We have very simple recipes that are followed by people that we can train and teach to produce the food very quickly. So that's been a big plus for us. In terms of innovation, this is not a business that is going to be innovating and changing its menu there's no revolution around our food. There's just constant evolution. We have 4 or 5 core items that are very popular, but we do like to play around at the sides. We have seasonal salsas that we change on a quarterly basis, reflecting the time of the year. We're looking at putting some churros on our menu as our first dessert offer, so we're trialing those at the moment. And we do product collaborations with other businesses. So there's always things changing, and we're always looking at adding 1 or 2 items and taking 1 or 2 off. But fundamentally, the core menu will always remain the same. I mentioned sustainability and provenance. You know, this is such a big area and such a moving target that we've decided that we have a sustainability ambassador who's involved with us and our supply chain, who sits down with sort of Andy and I on a monthly basis and tells us of what's going on in the world of ESG and what areas we can work on. We don't want to knee-jerk into changing things because, as we all know, you put your head above the parapet in some of these things, and then 3 months later you suddenly find what you are doing actually isn't any better than what you were doing before. So we wanted to take it very seriously, but fundamentally we do have a lot of our packaging is recyclable. We have very low wastage in our business because the shelf lives of our products are quite long. Interestingly, despite being very much a protein-led business, 75% of our menu is plant-based, and the meats that we do use are all higher welfare meats, red tractor from the UK. So where possible, we've tried to make as many inroads into this area as we can. Always work to be done. And the flavour and customizability, I think we've talked about. In terms of marketing, we're a young brand, a young, vibrant brand. We have a young, vibrant marketing team who spend their lives on social, talking to our customers and communicating with them and posting wonderful Instagram pictures of our food and the events that we run and things that go on within the business. I mentioned that we do work with some of our suppliers. We had a fantastic promotion with Brooklyn Barbacoa a couple of years ago, 3 years ago now probably, where we did a summer promotion where we were marinating our barbacoa beef in their beer. Lots of fantastic promotion about that. But Brooklyn were a fairly new beer into the UK, and it worked really, really well. And in fact, it was so popular we ended up leaving it on the menu for longer than the period that we said we would at the beginning. As I say, lots of work on social. We have quite a few social influencers on our program with over 12 million followers. Most of them I've never heard of. They're people from Love Island and all those sorts of things, but that's our demographic, that's our customer profile, young 18 to 35-year-olds. And they go in and eat in our restaurants. They post themselves doing that. It's been fantastic for us. We have a huge following of people who go in and post stuff for us, which is great. But the key thing for us during COVID that came out is that we have this multi-channel ordering strategy. We do obviously dine in, we do takeaway, we are very strong on delivery. We have self-service kiosks in one of our locations that we've been trialing. And during COVID, we just were simply able to get our food into the hands of people that had probably not eaten tortilla food before. There were probably only ourselves and Five Guys that were on any of the delivery channels almost as we locked down. And there's no doubt, with very little choice and people slightly fed up of the supermarkets after a month or two, that's really where we gained a lot of market share and got a lot of people to try us, and our numbers show that shortly. And just to confirm that, you know, being ready financially to put your foot down is one thing, but to be able to do it, you have to have an infrastructure that's set and ready. We've seen sadly too many casualties in this sector where businesses have grown too quickly and have fallen over. That's not our intention. We've beefed up our head office team and recently appointed a chief operating officer who's come in to help run a lot of the day-to-day stuff, while myself and Andy focus on a lot more of the strategic opportunities for the business. And so we have a very strong and experienced head office team, as you can see there. And also we have a central production kitchen, which is the sort of critical root of our business that allows us to double the size of our estate and we produce all our marinated meats, 1 or 2 of our salsas, and our black beans and pinto beans are all made centrally, all delivered out to our stores 6 days a week. And so, you know, we have a very consistent, brilliant product that we make centrally. So that's able to take us up to 80, 90 sites. So really exciting and really good news for us to be able to do that. This is a slide that we ummed and ahed about putting into this presentation, but I think the reality is we should talk about it, because you will know and will have read and will have heard, you know, there's potentially some headwinds. Well, I think we're probably in the middle of them. But I wanted to share with you why we feel as a business we're much better placed than most of our competitors in the sector. If we take people, for an example, obviously we're reading a lot about businesses being very short-staffed. We feel that we will be less affected by this, and certainly so far, as we sit here, we're in pretty good shape people-wise. And I think that some of the main reasons why we're confident that we can withstand this issue is we are what is perceived to be unskilled. I get slightly offended when people say that working in a restaurant is unskilled, because I think it's very skilled, and I think you probably learn more in a month in a restaurant than you would in 3 months at university. But that's just my personal opinion. But the fact is, it doesn't take a long time for us to train anybody in our business. We have very simple recipes. We have wonderful food, but anybody can make the food. It only takes 3 or 4 hours to teach anybody to make our food or to serve our customers. And so the one area we're not concerned about, which most people are, is chefs. Now, chefs in this sector have been a challenge for many years, but even more so now. It takes 3 or 4 weeks to train a chef in a restaurant. It takes us nothing like that amount of time. So we don't need to hire chefs. We can hire people straight off the street, teach them, and that's a big, big plus. We're also able to take younger people. We recently opened a restaurant in Windsor, which is a notoriously difficult place to recruit. We opened with a load of college kids, 17-year-olds, all working 3 or 4 days a week. And whilst there were some challenges, some tears, and you know, for a lot of them it was their first job, we've come through it, taking 20 grand a week. Business is successful. They love it. They love the food. They love the environment. They're generally working with and serving people of a very similar demographic, so it's a cool place to work. So again, we know that this is going to be our market now, so we have to embrace that and work with those younger people. And it's great to see young people with their first jobs working with us. We offer very competitive rates. We pay more than the minimum wage, and we don't differentiate on age. Our view is if you're good enough, you should get paid the same as somebody who might be a few years older than you. So again, that's an attraction for people. We're not a restaurant business that finishes at 1 o'clock in the morning. We are generally done and dusted by 10:30 in the evening, which is wonderful for our staff. They can get home safely before it all gets a bit messy in the town centres. So it's a very safe place to work. And that's a big attraction for young people. They don't particularly like having to travel in the middle of the night or getting night buses. So we are not a business that finishes particularly late. And let's be honest, this is a business in a really good position. There's lots of career opportunities for our people. 50% of our assistant managers have come up through the ranks, and 30% of our general managers. There's a great opportunity for people to grow with us. So again, that's an attraction. And we do offer great rewards and recognition. You know, we have something called Perk Box, where they get lots of benefits and discounts at cinemas and other restaurants and hairdressers and all sorts of things. We're very conscious that looking after people is going to be absolutely crucial over the next 6 to 12 months, as it always is, but more so now. So we've put in quite a lot in place here to make sure that we keep the people that we have, and we have a good way of recruiting them. And with regards to the supply chain, well, I think these are relatively short-term problems. We haven't really suffered from the issues. We work with Fresh Direct, who are probably the best blue chip food delivery and production business in the UK. We've been working with them for many years. They are owned by Cisco, so they're very well financed, very well backed. They've been able to ride out the storm of drivers better than most. We haven't been totally unaffected, but in relation to some of the colleagues I know, we really have had very few issues. It also helps that we don't buy products that are difficult to get hold of. We have a limited menu, so we're only buying kind of regular produce, so that's really good. In terms of our meats, because we marinate all our meats, we're not competing with other restaurants on the same cuts of meat. We don't sell chicken breast, we sell chicken thighs. And the same with our pork and our beef. We're not using the popular cuts because we're marinating. So actually, it doesn't matter. And the quality of our marinated meats is fantastic. So again, less of an issue for us. We will see, time will tell. Will there be pricing and increase in supply chain? Yes. I think Andy and I realise that, and we have baked in some expectation of slightly increased prices over the next 6 to 12 months. But so far, we haven't seen anything that we weren't expecting. So generally, let's assume that will remain the same way. And COVID-19, well, only positives really for us. It sounds a bit churlish to talk about positives out of COVID, but frankly, for our business, it's certainly given us a bit of a leg up.
Okay, so just moving on to some numbers. I'll touch on this briefly because I think the really interesting stuff's on the next couple of slides, but just to talk a little bit about the last few years. 2019 was a good year for the group. Was very much defined by 6 quality site openings, though, of which only 5 of them were in Q4. So actually, it didn't generate a significant amount of profit in 2019, but they're all generating really healthy sort of run rate profits now. And then 2020 was obviously sadly defined by COVID. For us, obviously, to show a minimal Ebitda drop year on year from 2.5 to 2.4 is remarkable, really, and goes to show sort of how well we've managed to fare during that time. I think a lot of businesses were making losses. But I think the only other thing I just wanted to point out on this slide is I'm going to talk about a lot about kind of COVID performance, but pre-COVID, you can see in the bottom right corner, we were in a very good position. For the last few years, we've been generating around 5% like-for-like sales growth, and that compares to the industry reporting tool CJP that everyone uses, which reported flat performance. So great sort of healthy business going into the pandemic, and as you can see from the 8 months to August figures here, generated some really good numbers this year. Which brings me on to the pandemic and telling the story around that. The bar graph, I think, is the most insightful thing. You can see it's the average weekly sales of the business by channel. So the red is eat-in, black is takeaway, and the gold bar is delivery. So pre-pandemic, our delivery sales were around 16-17% of total sales, with the rest mostly being eat-in. Clearly, well, come the 23rd of March 2020, we shut our entire estate, so the sales dropped off. We remained closed in April, but in mid-May, we started reopening, and actually we were really impressed with how the stores performed when they reopened. So it kind of gave us, well, we made a bit of a strategic decision to try and reopen ahead of our competitors with the view that we could try and acquire some customers through sort of lack of choice and introducing our brand to new people. And you can see, remarkably, by the time we got back to August, our sales were back to around 700,000 a week, which was the pre-pandemic level. And they stayed at that level then pretty much thereafter, bar a bit of a drop off in January and February of this year when there was another national lockdown. And all that happened as and when the rules changed and is the sales by channel just slightly varied. I think we're sort of looking back on the pandemic and sort of debriefing on it. I'm really proud of our operational achievement during that time to be able to flex to different rules and change the operating model in England, Wales and Scotland at different times because there were different rules. You know, there was a lot of agility shown by the business during that time, and I think that separates us from a lot of our competitors. And you can see that, you know, in recent months, things have just gone from strength to strength. Everyone was sort of saying, okay, well, you know, well, not everyone, but some people's question was, right, well, you know, you've done well during the pandemic, but when everyone else reopens on the 17th of May, what's going to happen? Yeah. And actually it shows that our customers, they've tasted our product during the pandemic and they've stuck with us. Our sales have gone through some phenomenal growth over this summer. You can see well above the pre-pandemic levels. So fantastic. And I guess the only other thing to point on this page really is that everyone was a little bit surprised that when the dine-in was a new channel that people could do again, that the delivery sales didn't drop away that much. I think everyone in the industry was expecting delivery customers to switch back, and that's happened a little bit, but that channel does look like it's permanently higher now. And I think for us, we really benefit from that for a couple of reasons. Firstly, compared to casual dining and full service restaurants, we were traditionally a lunch-led business, and actually what delivery's done is, rather than cannibalize our key day part like it's done for those businesses, it's actually helped grow a day part that was a bit quieter. So it's really sort of supplemented our revenue stream and not cannibalized. But secondly, and probably more importantly, certainly from a financial point of view, is we generate a similar level of profit on our delivered transactions. Because our price point's so keen in store, we've got that headroom to offset the commission costs. And actually, that's a fantastic thing. And I think that's going to define restaurant businesses that do well over the next 5 or 10 years versus those that don't. Because you need to be making the same amount of money on these different channels so that you've got the ability to kind of push them all with equal prominence. Clearly, we want people in our stores. We build stores to make them look nice, but actually it's totally fine for us to deliver some great delivery sales in the evenings as well. And then just moving on to some other sort of interesting data points. Our like-for-likes over the summer and this year have been phenomenal. There is VAT benefits in there. So with all of these like-for-likes, you just need to take off about 13% of them to get kind of the underlying. These compare to 2019, which is what lounges and TRG and all the other restaurants seem to be doing now, and also what CJ Peach are doing. And you can see year to date we're 22% up, and actually the performance over the summer has been phenomenal, sort of 30-40% like-for-like growth. The August number's not on there, but I can say it's plus 34%. So we're still well above CJ Peach, and I think that just further emphasises the kind of customer acquisition point in introducing Mexican food to new people. And also encouraging our like-for-likes are volume driven as well. So it's not just sort of sales that's driving it, it's volume too. Without going on about too many numbers, I think the one other thing I'd like to point out on this slide is, unlike a lot of other restaurant groups, we've really made our business model work outside of London as well. So you can see there that the fantastic performance is across the estate, actually, inside and outside the M25. I think outside the M25, we've got about 22, 23 sites. They perform almost as well as inside London. That gives us a phenomenal confidence in our kind of UK white space opportunity to open up in new markets that we've done recent months and hit the ground running. And then lastly from me, just to talk a bit about these other opportunities. We've got a franchise with SSP, and we've recently opened sites in Gatwick Airport and Leeds Motorway Services. They're both trading very well despite sort of significant drop in footfall. We've also got a site in Euston Station, and we're keen on pushing that channel. SSP are looking to rationalise the number of brands that they work with, and we've really outperformed their expectations in the sites that we've opened with them. I mean, Euston was doing about 8,000 a week as a Mikasa, which was their own burrito concept. We took it over and it's now trading at about 23,000 a week. And Gatwick Airport's trading very well as well. So there's a lot of opportunity there. We've got a trial site in a university campus in North London, and we're we're hoping to explore a further franchising opportunity with that business. And we're also looking at other licensing and franchising opportunities as well. Because the Tortilla concept, because of the fact that we have the CPU, it means we can de-risk one of the biggest franchise risks, which is the food. And it's very easy for us to then train that into other businesses. Clearly, we want to, in the UK, predominantly expand into our own bricks and mortar sites, but there is obviously other ways of supplementing that in kind of travel locations. We open a site in Merlin, and we're in discussions about expanding that to potentially operate in some other, we've got Chessington at the moment, we're looking at other sites as well. And then as mentioned, there's a list of other things on this slide that we're looking at. So it's super exciting, and the fact we don't need extraction, we've got the CPU, just means we're really well placed to kind of take advantage of other opportunities that come our way.
Okay, so on the final bend, really exciting opportunities, but fundamentally this business is, this IPO is about UK growth and company sites, and why we found ourselves wanting to pursue this option. And simply, the property market has fallen now very much in our favour, and we are committed to doing another 45 openings in the next 5 years. So it's not outrageous growth, but it's very good, very consistent. We want to do 8 or 9 bricks and mortar sites a year and 4 or 5 cloud kitchens. Those are the absolute kind of bottom line requirements for us. Outside of that, clearly Andy's talked about some wonderful opportunities with franchising and other licensing opportunities. And at some stage, we will look at the European opportunity for us. But the UK pipeline of sites for us is looking as strong now as it's ever done. In fact, way more than it's ever done in the past. We're able to look at bricks and mortar sites in our typical high footfall locations now, but the rents have generally dropped by 20 to 30% in most locations. Obviously, we all walk up and down high streets now, and we've seen the amount of properties that are available. So we want to make the most of that, because we do believe that the high streets will come back, maybe in a slightly different way. But for us, that's where we want to continue to trade. Because of our success on delivery, it now allows us to look at secondary locations, perhaps locations that we wouldn't have done before, some sort of secondary sites, which basically means slightly off pitch. Slightly off pitch means much lower rents. And because we know that through our delivery platform, we can generate really good sales just out of a delivery business. So that's opened up other sites. And the success of our cloud kitchens so far means that we're going to continue to pursue those. We have one of the best delivered products out there. A lot of our fellow restaurateurs sadly don't. Burgers don't travel particularly well. No one's sorted out the French fry issue yet. So outside of Indian and Asian cuisine, and certainly our food, there's really not much stuff that gets delivered that's really good. Now, we wrap our food in silver foil, so a burrito is fantastic 15 or 20 minutes, half an hour later than when it was made. Much better than most other products. So that's why our delivery has been so popular for us, and that's why we'll continue to pursue those cloud kitchens. We had a white space document done back end of 2019, which highlighted at least 121 plus our existing estate of sites around all the demographics that we gave them and where we already traded. Frankly, that number now is very conservative because of these extra opportunities that we're going to find. Next year's site pipeline is virtually complete, which is fantastic for us, and we're already starting to look at 2023's pipeline going forward. I wanted to just specifically give you some examples of how the rents and landlord relations have changed since COVID. These are 3 locations that we would have done anyway, but their return on capital that Andy mentioned earlier would have been much higher. Our sales hurdles would have been higher, numbers that we'd have been comfortable with. But since COVID, we've been able to renegotiate at least 20% off rents on all of these. We've managed to secure phenomenal landlord contributions. So it's brought down the sales hurdle in all of these sites by sort of 5 or 6 grand a week. So, I mean, that's phenomenal. Now, we don't envisage the landlord contributions continuing. We're already starting to see the market changing a little bit. The rents are still 20% down and will probably remain that way until finally the government decides to end this rent moratorium, and then there may well be another load of sites that become available. So we want to make the most of it, and so far we have. When I talk about this being an exceptional opportunity, I've been doing this a long time. I've been running restaurants for 30 years. I think it is important to note that I have never seen a property market in the favour of this sector ever. I mean, this is a once in a lifetime opportunity, and we're delighted to have got the IPO away and delighted to be given the opportunity of making the most of it. So, in conclusion, we've got a brilliantly resilient and adaptable business. We proved that pre and during and post COVID. Our numbers are looking exceptional. We've got a well-run, well-financed, strong team underneath Andy. The property landscape is very exciting. We've got some great people KPIs that we've proven that we invest and we look after the people that work for us. Outside of the standard bricks and mortar sites, there's a lot of strategic opportunities for us, which we're pursuing. A cracking management team, and I think, as I've already said, this is a once-in-a-lifetime opportunity for a business like ours, and we're very excited about the future. Thank you all very much.
Andy, Richard, thank you very much indeed for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard, and we'll send you an email when that's ready for your review. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation has ended, we'll redirect you for the opportunity to provide feedback in order that the company can really better understand your views and expectations. It'll only take a few moments to complete, but I'm sure will be greatly valued by the company. Andy, Richard, I know I haven't given you particularly a long time to review the investor questions submitted, and you have received a number throughout today's event, but perhaps if I could just hand back to you to read out those questions and give a response where it's appropriate to do so. And of course, any questions further that come in, they were just appear in that dashboard. So thank you.
Absolutely.
Okay. All right. Thank you very much, Mark. Okay, so first of all, to Simon C, thank you very much for your question. The question is, do you look to acquire some of the smaller brands to accelerate your growth, or do you see it through organic means? Great question. Predominantly, we'd see it through our organic means ourselves. We've said that the pipeline is pretty strong for us, but of course, it would be irresponsible of us not to look at those situations. We have got some cash in the business now. We're able to look at smaller businesses if they became available and if they were in the right locations for us and they suited the plan of the business going forward. Then absolutely, we would certainly look at those. But focus-wise is organically. If something came up opportunistically, we'd definitely look at taking it.
Okay, then the next question was from Sanjay H, which is, given you've taken a centralized model with your CPU, what is your contingency planning and resilience plans for any impact to the Tottenham Hale site? Very good question. We have a relationship with Fresh Direct. We've got space booked in their kitchen in case, and they've got our recipes on hold in case we ever need to move our cooking there. And we're also exploring a relationship with an outsourced food provider that provides food for lots of restaurant groups, and that's up north. So we've got a couple of different ideas, and we're also looking at taking another CPU of our own. As Richard says, our existing facility's got the capacity to grow with the business, but in the end, we will need another one. And we're looking at sort of a site either next door to the existing one or sort of elsewhere in the UK. Which one's next?
If I take Mark I's one, which is how does Tortilla differentiate itself from other burrito Mexican chains in Independence? Well, I think through the presentation, I did highlight a lot of our competitors and the fact that they have been through difficult times. I think the truth is, because we pushed forward and invested in a central production kitchen and our management team at an early stage where we only had 9. I mean, I joined when we had, I think, 10 sites, and we then invested in the management and the central production kitchen. That gave us a leap and a head start that allowed us to get our KPIs more consistent than our competitors. I think our very relentless approach to properties has served us well. We haven't closed the site, as Andy mentioned, and we are able, through all of those decisions that we made, to keep our prices competitive. I mean, frankly, if I went into Chilango or Chipotle, I like what they do. I like their food. It's fine, but they are unable to get the same KPI levels that we are. And we have stolen the march on them now. We're at 60 odd sites, and our closest competitor in the UK has now only got 14 sites. So we want to keep our foot down and keep differentiating between ourselves and them.
So just then moving on to Michael D. Do you have any KPIs to which investors can measure performance, i.e. new store openings? Absolutely. New store openings is one of them. Like-for-like sales growth is the other. And I think, for the foreseeable future, we're going to be reporting that versus 2019, just because of the mess that COVID created. We analyse that internally, both with and without the VAT benefit, the 5% rate, which is now 12.5%. And then the key metric ultimately is corporate EBITDA for us and store EBITDA. So we will continue to look at those on a UK GAAP basis rather than messing around with the IFRS 16 adjustments to rent, which confuse things. So they're the kind of key KPIs that we use internally, and we see as being used externally and consistent with sort of lounges and TRG and our peers. The next one is from Adam S. It's quite a tasty question. What would your year-to-date EBITDA be if you were to strip out the benefit of the COVID-19 exceptionals? It's such an interesting question, and there's so many different ways of looking at that. Clearly, there's been the VAT benefit. We've managed to negotiate some rent concessions. We've also benefited from a business rates holiday and some restart grants. Work that I've done previously, it's not on a year-to-date, but if we look at the full year, we're projecting an EBITDA, and the research note is just over 8 million. I think that Liberum produced, which we're pretty comfortable with. I think if you were to strip out the VAT benefit, but then also add back lost profit from sort of January, February, March, when there was a national lockdown, so you've got to obviously adjust the good things out as well as the bad things. Our underlying EBITDA would have been around sort of 6 million for this year, rather than 8. So you're looking at sort of 20-25% lower.
And just to add to that, we have had a few locations in central London that we haven't opened.
Yeah.
So we haven't traded in not many sites, but it's 3 or 4 sites that we haven't opened. So there are puts and takes in this. Yes, we've taken advantage of the benefits that we've received from the government, as we should as a responsible business. And actually, the truth is we're still not out of this yet. Who knows in reality. So I think it's been a very, very good year. Yes, we've been helped by the government, but equally we have had lockdowns and we haven't been able to open some of our sites. So it's a bit of a benefit as well.
What proportion of existing holders sold at IPO? It's a very good question. Of the shareholders pre-IPO, a lot of them didn't sell, but obviously most sold a proportion. I think we'll have to come back to you with the exact number if that's of interest. I sold only 20% down. Obviously, keen to keep as much in the company because I think there's a great opportunity here, and for me, the value is very much in the long term as well. But we can certainly revert on the specific number. The main seller was our old private equity firm, Kilvest, who sold 50% of their interest down at IPO. Obviously, as a PE firm, they'd been involved with Tortilla for about 8 years, so they wanted to realise some of their investment, but everyone else sold sort of considerably less than that.
As the CEO, I sold 25%. I've been in the business 7.5 years. I haven't taken any money off the table. That was as much as I wanted to. I'm, like Andy, hugely excited about the opportunity of this business. I certainly wouldn't want to be running any other form of hospitality business at this time. So, we're all aligned. Our founder, Brandon Stevens, has sold down 25%. He will remain as a non-exec. And we are quite excited that we've got Emma Woods joined us as our chair lady. She's the ex-CEO of Wagamama, and probably the most successful casual dining business over many years. And Lawrence Keane, who's joined us as our non-exec from Hollywood Bowl. So we've really strengthened the board, and it's ready for the next stage.
It's an interesting question from Sahil S here. Based on planned openings for next year and the year after, will expansion be self-funded from free cash flow? And then talk to us a bit about the international units. So yes, the funding of new sites will be self-funding. The business is currently net cash, not net debt. Now post-IPO with a small fundraise that we did as part of the IPO. As we're only spending sort of 350, 400,000 on the new site fit outs, and our ROCEs are very strong, they will be self-funding. And then the international bit, we did a white space document a few years ago on that. We've done a lot of research amongst some of our competitors. So we've got an idea of some countries that we would probably like to target. I think the general consensus would be it's best to initially do a few of your own stores, and then depending on which country you're looking at, in some countries, once you've proven your concept, it's better to franchise it. So we kind of make that decision further down the line, really. I think it would, to get any decent scale in Europe, there'd need to be an element of franchise for us without a significant, obviously, increase in our own head office.
A couple, Stephen R, how often do the sites need to be refreshed and what sort of cost is involved? Generally, we build these things pretty solidly at the start because of the footfall and the traffic that's in them. The capex generally is between 350 and 400,000 for a new site, and we look at refurbing after 5 years, and generally that's up to 100 grand. They're not really complicated fit outs, just hard surfaces, and generally the kitchens are, the best kit that we can possibly get. But so it's about a 5-year plan for a refurb and up to 100 grand for each site. And again, that's all been budgeted going forward. Just one other question from Mark I about EU pre-COVID versus now percentage of staff. Well, obviously in London, our EU percentage of staff was quite high. It was probably 50%, 40 to 50%. Outside of London, not quite so high. We haven't done recently, certainly in the last month, what that percentage looks like now, but we're pretty much fully staffed in London at the moment, so we haven't seen too many people issues yet.
As a company, the overall EU percentage is 37% at the moment from the last 4 months. So not a massive reliance. I mean, it's not an insignificant proportion of staff, but it's not a crazy amount either. As Richard said, there's outside of London, it's certainly a lot easier. How often? Oh yes, nice, we covered that one. This is from Matt G. How does your delivery service differ from competitors? Well, I guess the delivery service versus our direct competitors, Chilango and Chipotle, is pretty similar. We serve the same sort of food. We think that our prep times, well, we know our prep times are very strong. So when I've worked in stores myself, every now and again, the riders will come to collect the food as quick as the ticket comes out the machines, because we set our wait time to 0 minutes. So we're very quick, and we just make sure that we're top of the list with all the rankings, the operational rankings, with the delivery partners, to make sure we're kind of prominent on the page. So we think we're very good. Burritos as a product travel very well, foil wrapped. It's a very strong delivery product, and the bowls travel well as well. So I think it's kind of just a proposition that works quite well with delivery overall. And then there's a question from Sahil. In that 8 million of Liberum Ebitda estimate you quoted, does that include pre-opening costs? No, it doesn't quote pre-opening costs. Our pre-opening costs are pretty minimal, about 40 grand per new store opening. So not a significant cost for us, which is a small amount of rent and training costs associated with setting that store up. So yeah, that's not a big number when you're looking at the overall quantum.
Andy, Richard, I think you've addressed every single question that's come in from investors. And Richard, sorry, I made you go around the other side to see the Q&A. I should have made that available on your machine as well. My apologies. Well, look, perfect timing as well with 1 minute to go. So you must have, perfect responses. So look, I know investor feedback's important, and I will shortly direct those on the call to provide you with their thoughts and expectations. But perhaps before doing so, Richard, I could just ask you for a few closing comments to wrap up with.
Well, I think hopefully the presentation says it all. We are genuinely very excited about this opportunity. The opportunity to do this via an IPO is, we're still sort of coming down from the clouds a bit on how excited we are to have got our IPO away. It's oversubscribed, and hopefully a lot of people are as excited as we are, and we'd be, love to have some more investors come on board. We do think it's genuinely a great opportunity for the business. Looking forward to it, and thank you all very much for your time this morning.
Yeah, thank you all.
Andy, Richard, thank you once again for updating investors this morning. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Tortilla Mexican Grill, I'd like to thank you for attending today's presentation. That now concludes today's session, and good morning to you all.